Good morning, everyone, and happy Monday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. I hope you had a wonderful weekend. This morning we'll be taking a look at exciting stock market news largely surrounding the banking industry. We'll see our notable earnings reports and what's in store for the week, and which stocks are the morning's biggest gainers and losers. Keep in mind that we are switching things up this week, so instead of tomorrow's usual stock market news, we'll be doing some deeper dives into some trending stocks and just testing out some different kinds of content. This will be a trial period, so please give us as much feedback as possible. We always love hearing from you guys. Now let's get right into this morning's exciting stock market news. U.S. stock futures are slightly in the red this morning as volatility continues to plague the banking industry. Right now, Dow futures are down 0.05%, S&P 500 futures down 0.06%, and NASDAQ futures down 0.09%. Looking at the economic calendar for this week, the Federal Reserve's interest rate decision will be on Wednesday and will be the main event of the week. We'll also have the initial jobless claim on Thursday and PMI data coming out on Friday. In big headlines this morning, shares of Credit Suisse have plunged 58%, down to just 86 cents per share this morning after their rival UBS agreed to acquire the bank in a deal worth about $3.2 billion. This merger of Switzerland's two largest banks was engineered over the weekend by Swiss authorities. It is speculated that without a deal, Credit Suisse would have likely collapsed this week and could have spread further contagion. Credit Suisse will conduct its business in the ordinary course and focus on restructuring measures in alliance with UBS. The combination will likely create a business with more than $5 trillion in total invested assets. The UBS stock is currently rated a moderate buy with an average upside of 39% and plenty of buy ratings coming in today, while the Credit Suisse stock is rated a hold with a mix of buy, sells, and holds coming in this last week. Shares of New York Community Bank are on the rise after they agreed to purchase parts of what used to be Signature Bank. As of today, the 40 former branches of Signature Bank will operate under New York Community Bank's Flagstar Bank. Their deal included the purchase of about $38.4 billion of Signature Bridge Bank North American assets, including loans of $12.9 billion. Approximately $60 billion in loans will remain in receivership for later disposition by the FDIC. The New York Community Bank stock is currently rated a moderate buy with an average upside of over 60%. And shares of First Republic Bank continue to fall, down another 21% this morning as they receive yet another downgrade. S&P recently lowered its long-term issuer credit rating on the bank, citing substantial long-term challenges for the business. They did note the support from major U.S. banks who agreed to deposit about $30 billion into the troubled bank, but S&P said that it does not view this deposit infusion as a longer-term solution to the bank's funding issues. In addition, we think attracting meaningful deposits will be difficult, constraining the bank's business position. The First Republic Bank is currently rated a moderate buy, with a bunch of holds coming in this past week, but some still very bullish price targets. Now moving over to notable earnings reports. We are in a fairly quiet period for earnings, but looking at the calendar for the week ahead, we will be hearing from Nike and GameStop on Tuesday, Chewy on Wednesday, and Accenture and General Mills on Thursday. Also this week, we have some investor events on the calendar. We'll be hearing from Adobe and Nvidia on Tuesday, Autodesk on Wednesday, and Altria Group and Chevron on Thursday. Shares of Pinduoduo are falling in the pre-market after they missed on both earnings and revenue. Currently down about 15%, they reported Q4 earnings per ADS of $1.21, missing expectations by 3 cents per share. Their revenue of $5.77 billion did grow 46% year-over-year, but missed expectations by $140 million. The company said they'll be stepping up their investments in technology to drive sustainable growth for their company. They're currently rated a unanimous strong buy with an average upside of 29%. And shares of Foot Locker are down this morning. Despite having earnings that were well past expectations, they did offer soft future guidance. They reported Q4 earnings per share of 97 cents, crushing the expectations by 47 cents per share, and revenue of $2.33 billion beat expectations by $190 million. But looking forward at 2023, management is expecting sales to fall between 3.5 to 5.5%. This is wider than the analyst expectation of a 3% decline. Their stock is currently rated a moderate buy with an average upside of 16%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by New York Community Bank on their acquisition of some of Signature Bank's assets. Trading under the ticker NYCB, the stock is currently up 29.5%. They're followed by Karuna Therapeutics under KRTX, up over 14%, and Western Alliance under WAL, up about 7%. And no big surprise here, our biggest losers this morning are led by Credit Suisse. Trading under the ticker CS, the stock is currently down 58%. They're followed by First Republic Bank under FRC, down just over 20%, and Pinduoduo under PDD, down nearly 14%. So that is going to be everything for Monday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. Don't forget, we'll be switching things up tomorrow, so we'll be out a little bit later in the day, but make sure you stop by and give us your feedback on these different styles of videos. Thank you guys so much for watching. I hope you have a fantastic Monday, and I'll see you back here next time.